Happy New Year, everyone. Welcome to the Stockscores Market Minutes for January 3rd, 2012. Sign up for my free newsletter at stockscores.com/newsletters.asp, the address that you see on the bottom of your screen. All right, let's get right into the market. Today was a big, important day technically for the markets. The euro broke its downward trend line. I wouldn't say it did it decisively so, but it is important that it has broken that downward trend, and that helps the US dollar break its upward trend line. And again, not a decisive break because we closed off of the lows on the US dollar, but it does look like the US dollar is going lower, and that is a positive for just about everything else because, of course, most assets are priced in US dollars, and if the US dollar goes down, it makes those other assets cheaper to buy. Well, gold really didn't benefit a whole lot from the weakness in the US dollar. It is touching right off of its upward trend line. The falling tops in this chart are a concern to me. I think that at best, gold goes sideways here, and it does have the potential to break that upward trend line. So I would be cautiously optimistic with gold right now. Oil did manage to break through some resistance, of course, with tensions rising in Iran. Oil prices had a big day to the upside. This is a ETF based on oil, and it looks to me like oil is going higher. However, because it is motivated by a political event, it could end very quickly if there is some resolution to that event. This is not price driven by supply and demand. It is more driven by abnormal events. The S&P 500 broke out of its pennant pattern. This is something we've been discussing for some time. However, it failed to close above its open, in fact, closing right at its low of the day. That makes me think that we'll probably see prices pull back in the stock market in general, and so this is not a real strong buy signal, but certainly cause for some optimism nonetheless. The VXX, which of course represents fear, is in a downward trend. It bounced off of that downward trend line today and looks as though it will move lower. Again, it wouldn't be surprising if it goes up for a day or two, but looking out in the next few weeks, it should be lower. TSX was able to break its downward trend line, and suddenly it looks better than the S&P 500, where it has actually been lagging that important index for some time. I think that the TSX is likely to move higher. One of the key things motivating strength in the Canadian market right now is strength in the US dollar and that weakness in the US dollar and strength in oil. And so I would be optimistic on the Canadian market and start to take some positions there. So I am optimistic on US, Canadian, and oil. Neutral on gold. The markets are in early stage of turnaround. Stocks should be higher in the weeks ahead, although down days are likely along the way. Well, I hope that helps you with your trading. I think it's time to get back into the market. Have a great week in the market and trade well.